What is insurance? Can be insured by private companies, typically share some common characters. Large number of similar employer units. Since insurance operates through pooling sources, the majority of insurance policies cover individual numbers of large classes, allowing insurance to benefit from the law of large numbers in which predicated loss are similar to the actual losses. Expectations including loyalties of London, which is famous which is famous which is famous for ensuring the life or health of actors, sports fighters, and other famous individuals. However, all employers will have particular differences which may lead to different premium rates. Definite loss. The type of losses take place at a canoe time and place for a canoe cases. The classic example involves the death of an insured person on a life insurance policy. Fire, automobile accidents, and worker injuries may all easily meet this quota. Other types of losses may only be defined in thoroughly. Occupational disease for insurance may may involve prolonged exposure to injuries, conditions where no specified time, place, or cases is identifiable. Ideally the time, place, and cases of a loss should be clear. News that a returnable person with sufficient information could objective verify all three elements. Accidental loss, they even that consi- they even that cons- they even they even that constitutes that trigger of a claim should be fortuitous fortuitous or or at last outside the control of the beneficiary of the insurance. The loss should be pure in the sense that it results for an event for which this there is only the opportunity for cost. Events that contain specifically elements such as ordinary business risks such as ordinary business such as ordinary business risks, or even printing a lottery ticket and legal and gently not considered insurable. Large losses The size of losses must the size of losses must be large losses large losses. The size of losses must be meaningful from the representative of the insurance. Insurance premiums need to cover both the accepted cost of losses plus the cost of issuing and administrating the policy, adjusting losses, and supplying the capital need to resourceable accessory that the insurer will be able to pay claims for small losses. These less these latter these latter cost may be survival time the size of the expected loss time the size of the accepted cost of losses. There is hardly any point in paying such as cost unless the protection offer has real values to a buyer. Affordable premium if the affordable premium if the likelihood of an insured event is so high or the cost of the event so large that is resulting premium is large relative to the amount of protection offered then it is offered then it is la- offered then it is not likely that insurance will be purchased even if on offer. Future more Furthermore, as the accounting profession formally recognize it official formally formally recognizes formally formally recognizes in official accounting formally recognizes in financial accounting standards the premium cannot be so large that there is no reasonable chance of a significant loss to be insurable. If there is no such as chance of loss, then the transactions may have the form of insurance, but not the substance. See the U.S. Accounting Financial Accounting Standards Board pronouncement number 113 accounting and reporting for reinsurance of short duration and long duration contracts. Clearable losses. There are two elements that must be at last estimatable if not formally clearable. The opportunity of losses and the accident loss. The opportunity, the probability of losses and the attendant loss, attendant cost. The probability of losses and the attendant cost. Probability of loss is generally gently of losses is probability of losses is grantly an empirical probability of losses is currently an empirical excuse. Wild cost has more to wild cost wi- wild cost has more to do with the ability of reasonable person in possession of a copy of insurance policy and a proof of loss associated with a claim presented under that policy to make a reasonable defined and objective element of amount of the loss recoverable as a result of the claim limit risk of limit of risk limit of limit of risk catastrophe limit of catastrophically large losses, insurable losses, and identically independent and non and non catastrophic, meaning that is losses do not happen all all at once and that individual losses are not survive in order to bankrupt the insurer. Insurance may prefer to limit their exposure to a loss from a single even to some small portion of their capital basis. Capital capital concentration insurer ability to sell earthquake insurance as well as wind insurance in hurricane zones. In the United States, the federal government insured flood risk is specially identified area. This commercial fire insurance is possible to find single properties whose total explored value is well in excess of any individual insurer capital capital constraint capital constraint such as properties and grantly shared among survival insurances or are insured by a single insurer with which syndicates that risk into the insurer market. Legal: when a company insured a individual when a company insurer an individual identity, there are basis large requirements and and registration. Survival commonly cited large principles of insurance cited cited large cited large principles of insurance include 26